Hi, it's Lindsay from the Buy Sell Love Durham team here. I'm with Kurt Henry. Now, Kurt Henry is a mortgage broker for the Mortgage Center, and he runs a team called the Henry Mortgage Team. So, welcome, Kurt.
Thank you. I'm glad to be here.
Kurt, can you maybe just give us share with the listeners where are you located?
So our office is in Curtis Road and Highway 2 at 2727 Curtis Road. Is where our office is.
Awesome. And I would assume that you're pretty much working virtually at this point, like most of us?
We are, for sure. We're 100% remote at this point. So yes, we are.
Perfect. So, I mean, I remember, like, I've been dealing with mortgage brokers and lenders that work inside a bank branch for 35 years selling real estate. Can you maybe just give the listeners a bit of a brief explanation? What's the difference between going to a mortgage broker and going into a bank and talking to the loans officer?
Yeah, the couple of differences. Normally, when you're talking to the bank, as an example, the bank will be able to give you advice and products based on what the bank can offer. But from a broker's perspective, we can, we have different options based on different products and pricing and that just from multiple banks and lenders. So we have a little bit more option from the broker side versus when somebody's working with the bank. And then the other main difference is that a mortgage broker is 100% focused on mortgages. So when you go to the bank, sometimes the banker might be doing a number of other things that they're responsible for. And so a mortgage broker is just, more narrowly focused on mortgages.
And how do you get paid?
We get paid from the bank for the most part, banks and lenders just pay us a finder's fee when we arrange a mortgage.
Okay. And I think it was explained to me years ago that, I mean, if you have someone sitting in a branch and you're paying all their benefits and all their holiday pay and all that, I mean, it's easier just to pay a finder's fee out to a mortgage broker to allow them to package up the deal and do something similar to what they do in the bank. So it's a really good thing for the bank to deal with mortgage brokers, from my understanding. So one of the questions that I constantly get, and just maybe give a brief explanation. So about a month and a half ago, when we started heading into this pandemic, the Bank of Canada dropped their rates. And everybody expected that the mortgage rates would fall as well, but they didn't seem to fall. Can you maybe give us some clarification on what the relationship is between mortgage rates and the Bank of Canada rate?
Yeah, for sure. It's definitely confusing for, if you don't necessarily know the ins and outs of it. So the Bank of Canada rate is also referred to as the overnight lending rate. And that rate it basically it influences the prime rates, what they call the prime rates, in the banking industry. So a typical prime rate, for example, right now is 2.45%. When the Bank of Canada changes their rate, it will often change the prime rate. But the prime rate normally has a direct impact on the variable mortgage rates. So if the Bank of Canada changes the bank rate, it will often, not always, but often it'll have almost a direct impact on variable mortgage rates. Somebody that already has a variable mortgage. But that's just one side of the coin. The other side of the coin is the cost of funds to the banks. So, it is possible that the Bank of Canada rate could go down and the fixed mortgage rates, as an example, could actually go up. And it's because there's different factors that affect, the variable rates and the fixed rates. So when the cost of funds for banks and lenders increases, that means that the fixed rates will go up. And that has happened in the last month and a half or so. Fixed mortgage rates have been going up and down, even though the Bank of Canada rate has steadily only come down. So that happens often. If anybody has any questions on that, you can feel free to reach out.
So I know that there's a lot of people out there that are struggling right now. There's a lot of unemployment. There's a lot of people that they've been laid off, or they've effectively just stopped working. And I know that Canadians tend to be quite heavily leveraged and You know, if you are a person that's a family that's got a big mortgage on your house and you maybe got a line of credit and you've stopped working and the government's giving you money, but it's not enough to keep it going. One of the things I've seen, because I've seen 4 market corrections in my career in 35 years, and the biggest, most severe one was in the early 90s. And one of the things that I saw, Kurt, back in those days was if somebody took early steps to better their situation, I mean, the trajectory of their own situation was so much better. So if someone is running into some issues, and let's say they're out of work or they're running out of funds, whatever that is, what would you suggest as far as kind of a point-by-point stepping process to really help them better the situation they're in?
So it's a great question. I have basically 4 steps that I would suggest to people that are either having challenges or foreseeing challenges to be had. Now, before I get there, though, I just want to mention that the big issue here is liquidity, and liquidity is a lack of liquidity. So of course, if people are used to income coming in and then expenses going out, well, when the income drops or disappears altogether and expenses are still going out, that creates a lack of liquidity. And so a lack of liquidity is normal for individuals right now, but it's also the same for companies, governments, and and industry. So a lack of liquidity is the same for individuals as it is for other entities around. So given that, given the fact that liquidity is the challenge, there's 4 steps that I think are important for people to keep in mind when they get into this situation. So the first step is stop the bleeding. In other words, look at the cash outflow that's going out. Is there a way to cut down the cash outflow? Look at for somebody to look at their expenses, look at their mortgage payments, their property tax payments, any other payments, any money that's going out of the household, to look at those and to stop the bleeding. What I mean by that is try to, limit the amount of money that's going out. So that's step 1. And I guess, in doing that, mortgage payment deferrals are a part of that. And there's a number of things that people could do to try to limit the outflow of cash.
Now, if I could stop you there, Kurt. So if people want to reach out to you about mortgage deferrals or how any of those processes work, what I'll do is I'll put all your contact information in the bottom of this video so people can reach directly out to you.
Perfect. Yep, that sounds good. And then, second step I would say is to focus on all the different programs that are out there. There's a ton of different government programs, of course. I'll mention a couple of them, but the best way to look at all the programs is to go, at least from my opinion, is to go to the website canada.ca. Canada.ca has a list of programs there for individuals, companies, and I'm sure there's other websites as well, but Canada.ca does have a list of the different programs. One of the programs is the CERB, Canada Emergency Response Benefit. That's the one that pays, $500 a week up to 60 weeks to somebody that's lost their job as a result of COVID. Mm-hmm. So that's one program. Another program is the Canada Emergency Wage Subsidy. That's more so for employers, which pays 12 weeks of wages, or up to 75% of wages for employees. Mm-hmm. So it's a way for, to try to help companies keep their employees on payroll. So that's another program. And then there's another program called the CEBA. It's like a government loan that whereby the government gives companies a $40,000 loan, and then if the companies repay that money by the end of next year, I think it is, they only have to pay up to $30,000 of it back. So again, there's other programs and there's more to look into on those programs, but my point is, step 2 is to look at all the programs, see what you can benefit from in those programs. Okay. And then step 3 is if the first two steps didn't work, in other words, stop the bleeding and look at the programs, step three is to look at accessing some of the equity in some of your assets. Maybe you've got assets that you can access equity out of. Maybe it's selling some assets. Maybe it's the equity in your house, for example. That could be an option to see. We're talking about the lack of liquidity. So to fix or help the lack of liquidity, looking at where you can access that cash in the short term, one of those places is your assets. And
when you're talking about your house, accessing the equity out of your house, what are the common ways of doing that?
So there's different ways you can access equity out of your house. You could talk to a mortgage broker or somebody in the mortgage industry, and basically what you want to do, you could look at increasing your existing mortgage and taking the equity that way to get the cash. You could look at doing a new mortgage, like paying out the existing mortgage and getting a new mortgage, which might make sense because today's mortgage rates are so low. So it depends, but that could be an option. Another way is to get a line of credit, like a secured line of credit against the house. So there's different ways, but there's definitely, it's case by case on what makes most sense.
Mm-hmm.
So those are just a few ways that people could look at accessing equity.
And what's the fourth step?
The fourth step is to basically, make sure or get in touch with a realtor like yourself, Lindsay. So if liquidity is the challenge and you need to access equity in your house, having a conversation with a realtor like yourself would be a good thing to do, because just for example, if somebody owns a $400,000 house and they have a $200,000 mortgage, well, they have $200,000 of equity in that house. But if the value of that house is $500,000, well, now they have $300,000 of equity in the house. My point is that the value of the house is such an important factor in determining how much equity there is to potentially access. And one of the ways to find out what the value is going to be to talk to a realtor like yourself.
Yeah, it's interesting. Again, going back, my memory of going through the first kind of recessionary period back in the early 90s, I had so many conversations with people that didn't end up with them selling their house. What they ended up with them is me being more of in a customer service role, helping them understand the options that are available. Some of them that you've kind of covered here, and they didn't have to sell their house. And for me, it's goodwill building my own kind of my own sphere of people that refer me, because not everybody we deal with needs to sell their house, and it's not something, to me, that's the last resort. If things are going south financially, the last thing you want to do is sell your house. So if there's any way that I can work with a client, and I know you're the same way, to keep them in their house and it makes financial sense for them to stay there, that's the ultimate goal.
For sure. And I would, to add on to that, I think the value of having a conversation it's actually, that probably should have been step one first, is to have a conversation with a mortgage broker and a realtor. To sometimes we don't know what we don't know, and a conversation will bring things to light that perhaps weren't considered in the first place. So having step number one really should be having a conversation with somebody that you trust, or you can get referred by, on the mortgage broker side, on the realtor side, and they might be able to bring up some things that, somebody didn't have in mind at the beginning.
My partner, Wendy Starr, was a realtor in Phoenix during the downturn of the US economy in 2008 over 2012. And one of the visuals that I always remember them talking when the values were falling, and that's not really what's happening here, but the analogy looks the same. The visual is, if you can visualize a slinky going down a set of stairs, the only way of stopping is to get in front of it. And that's exactly what we're talking about, is before you start seeing things kind of heading in the direction of getting bad, if you get in front of that with conversations and advice, it just makes all the difference in the world.
That's so true. And I think, you know, based on client experiences that we've seen is there's two different types of people. There's ones that will not do something out of fear, and they'll just kind of hope that things get better. And then there's the other side, who, you know, people that will make the phone calls, have the conversations, try to, like you're saying, get in front of it. You know, it's strange to say, but if somebody needs to miss a mortgage payment, the best way to do that is to call the bank before that happens. And, you know, a lot of people will not call because there's that fear of what's going to happen. But if you make the call, it's actually, to your point earlier, it people are in much better positions doing it that way.
Yeah, I know we have similar ways of getting business. So much of my business comes from referrals from my past clients. So we've done really good work with them, and they refer us to their family and friends. And I would assume, Kurt, knowing you, that a lot of your business comes by way of referrals, which tells me that when people come to you, you do what's in the best interest of the client, right?
Yeah, absolutely.
I don't think that would change.
Yeah, no, that's right. And you know, sometimes sometimes it doesn't make sense for us to do a mortgage for somebody, and other times it does make sense. And we'll be just transparent and say, yep, we can save you some money here, or no, you should do this or that. And that's the best way. And that's where those conversations are important in my mind.
So if they want to reach out to you by phone, what's your telephone number?
My phone number is 905-431-4054. That's my cell number, not my office line, because we're remote. So
okay, and again, it's the Mortgage Center, and it's the Henry Mortgage Team. Is that right?
Yep, that's right.
Well, thank you so much for your time and your advice. I know that one thing that I find right now, and it gets back to what you just said, is that information in advance, if people can make really good, solid decisions, things turn out so much better. And so thank you so much for taking your time. I know you're a busy guy.
No problem, Lindsay. Thank you. Thanks for having me.
Have a great day.
Yeah, been great. Okay, thanks, Lindsay.